continue with our lectures. We are now on the public sector audit, how the audit is actually done. Now, fundamental principles of public sector auditing, Isaiah 100. That's the standard we use in the public sector. So, under this Isaiah 100, they spell out the financial audits. What do you mean by financial audit in the public sector? Financial audit focuses on whether an entity's financial information is presented in accordance with the applicable financial reporting and regulatory framework. This is accomplished by obtaining sufficient and appropriate audit evidence to enable the auditor to express an opinion as to whether the financial information is free from what? Material misstatement due to fraud or error. The usual definition. That is the same thing that is captured in Isaiah 100. Now, we also have performance audits in the public sector. What is that by performance audit? Performance audit focuses on whether interventions, programs, and institutions are performing in accordance with the principles of the 3 E's, which is economy, efficiency, and effectiveness. And whether there is a room for what? Improvements. That is the performance audits. Then we also do compliance audits in the public sector. Compliance audit is performed by assessing whether activities, financial transactions, and information are in all material respects in compliance with the what? Authorities which govern the audited entity. These authorities may include rules, laws, and regulations, budgetary resolutions, policy, established goals, agreed terms, or the general principles governing sound public sector financial management and the conduct of public officials. So that is compliance audits. Then the basic elements of the public sector audits. Some elements make public sector auditing, which we need to know those elements. All public sector audits have the same basic elements as the 3 parties to the audit. Parties to the audited financial statements, 3 parties to the audit. Then the criteria for assessing the subject matter. Criteria for assessing that is the subject matter of our audit is the information or activity that is what? Subject to audit. And the criteria are the benchmarks used to evaluate the subject matter. The resulting subject matter information. This is the outcome from evaluating or measuring the audit subject matter against the criteria. Now, when we talk about 3-party relationship, there are 3 parties to a public sector audit. What does it mean? All public sector audits involve the same 3 parties. The auditor, which is the professional man, the accountant. The public sector audits, this is the Auditor General and Audit Service. That is the what? The auditor. When they say the auditor, it means the Audit Service or the Auditor General in the public sector. Then the responsible party. This is the entity responsible for what? The subject matter information or for managing the subject matter activities or entity. The institution that prepared the financial statement for the auditor to come and audit. That is the responsible party. Then the intended users, those who will be using those informations. This may be legislative, that's the parliament, and oversight bodies or those charged with governance of the audited entity or the general public. Now, attestation engagements and direct reporting engagements. There are 2 types of engagements: attestation engagements and direct reporting engagements. Financial audits are attestation engagements in which the subject matter is the financial position, performance, or cash flow, which are recognized, measured, and presented in financial statements. The subject matter information is the financial statements of which the auditor expresses an opinion. Now let's go to definition of what? Attestation engagements. An attestation engagement is an audit where the responsible party measures the subject matter against the criteria and presents the subject matter information on which the auditor then gathers sufficient and appropriate audit evidence to provide a reasonable basis for what? Expressing a conclusion. It's 100. It's the same as the ISA. Now, what do we mean by direct reporting engagements? In a direct reporting engagement, it is the auditor who measures or evaluates the subject matter against the criteria. The auditor selects the subject matter and criteria. So the outcome of the audit is what? Presented in an audit report in the form of what? The findings, conclusions, recommendations, and what? Opinion. Note, performance audits are direct reporting engagements. Direct reporting engagements. So performance audit, that is what it is. Direct what? Reporting engagements. Compliance audit may be attestation or direct reporting engagement or both. That is the compliance audit. When a compliance audit is an attestation engagement, the subject matter of the audit may be a statement of compliance with an established and standardized what? Reporting framework. Levels of assurances, as we all know. In attestation engagements and some direct reporting engagements, the auditor's opinion is given with a level of assurance that is either a reasonable or limited assurance. Okay? So what do you mean by reasonable assurance? Reasonable assurance is high but not absolute, because you can have absolute what? Assurance. So reasonable assurance is high, it is very high, but not absolute. The audit conclusion is expressed positively. In the auditor's opinion, the subject matter is what? Compliant in all material respects, or the subject matter information provides a true and fair view in accordance with what? Applicable what? Criteria. When it's a limited, we are talking about a limited assurance report conveys the limited nature of the assurance provided. When providing limited assurance, the audit conclusion states that based on the procedures performed, nothing has come to the auditor's attention to cause the auditor to believe that the subject matter is not in compliance with what? The applicable criteria. So in this case, you are not saying it is true and fair or it's not true and fair. No, you are not saying that. But you say what? Based on the work performed. Based on the work performed. When providing limited assurance, the audit conclusion states that based on the procedures performed, nothing has come to. So we call it a negative what? Assurance. Now let's look at the 8 fundamental principles of public sector auditing. The first one is every auditing must follow these fundamental principles. It's the same as the normal audit in the private sector. 1, ethics and independence. So they are saying that the comment is that auditors should comply with what? Ethical requirements and be independent. So as far as public sector is concerned, you must also be independent. The professional judgment, due care and skepticism. Auditors should apply professional skepticism, professional judgment, and due care throughout an audit. It is the same as audit is audit. Whether you are doing audit in the public sector, you are doing it in what? Private sector, they all follow the same principles. So quality control. Auditors should perform the audit in accordance with what? Professional standards on quality control. Whether you are auditing private sector, you are auditing public sector, quality control is very essential. Then we should have auditing and management skills. Auditors should possess or have access to the what? Necessary skills. You need to be well trained, you need to be well versed in the subject before you go and audit in the public sector. Audit risk. Audit risk is the risk that the audit report may be inappropriate and may reach inappropriate conclusions. Auditors should manage the risk to what? Keep them within acceptable what? Limits. So we also consider audit risk, we consider risks in auditing the public sector. Materiality. Materiality is relevant in all audits. In all audits, auditors should what? Consider materiality throughout the audit process. Now, documentation is also very essential, whether in a private sector audit or in a public sector audit. Audit documentation should be what? Sufficiently what? Detailed. Then communication. Auditors should establish effective communication throughout the audit process. The audited entity must be kept informed of all matters related to what? The audits. Principles related to the audit process. What are the principles? The first one is the terms of the audit should be clearly what? Established. Terms of the audit should be clearly established. What do you mean by this? This should mean that there is a need to establish clearly the subject, the scope, and what objectives of what? The audit. Access to data, the report that will result from the audit process, and that is the contact persons and the rules and responsibilities of the what? Different parties to the engagement. So meaning that what is done in principle is that the audit team should establish the terms of the audit should be also clearly established. Then understanding the what? Entity to be what? Audited. You need to what? Understand your clients. So they say auditors should obtain an understanding of the what? Nature of the entity or program to be audited. Then you must also carry out a risk assessment, as we all know. So they say the auditor should consider and assess the risk of different types of what? Deficiencies, deviations, or the misstatement that may occur in relation to the what? Subject matter. Risk of fraud. And they are saying the auditor should maintain an attitude of professional skepticism and be alert to what? The possibility of fraud throughout the audit process. An efficient and effective audit. What does it mean? Auditors should plan their work to ensure that the audit is conducted in an effective and efficient manner. Now, sufficient and appropriate audit evidence. What does it mean? The audit procedures used should provide sufficient, appropriate audit evidence to support the audit report. So we know you are selecting the methods. That's methods of obtaining audit evidence can include inspection, if the need arises, observation, inquiry, confirmation, recalculation, etc., etc. Then evaluating the evidence. How will you evaluate the evidence you have obtained? Auditors should evaluate the audit evidence based on the findings from the audit evidence. The auditor should exercise professional judgment to reach a conclusion on the subject matter or subject matter information. It continues. The audit report, there should always be one. There should always be one, a report. And they are saying auditors should prepare a report based on the conclusion reached. When you come to the opinion itself, in attestation engagement, where an audit opinion is used to convey a level of assurance, the opinion should what? Be unmodified or modified, depending upon the circumstances. Then there should be follow-up. The SAI should monitor action taken by the what? Responsible party in response to the what? Matters raised in an audit report. So there should be a follow-up regarding what? Your findings and the action taken so far. Now, let's look at the fundamental principles of financial auditing. That is SAI 200. Now, reasonable assurance reporting and reporting what? Framework. Reasonable assurance. In conducting an audit of financial statements, the overall objectives of the auditor are to what? Obtain reasonable assurance. about whether the financial statements are free from material misstatements. 2, and then report on the financial statement and communicate the result of the audits. Then let's look at fundamental reporting frameworks, maybe for general use or specific use. We have the general purpose framework, which is designed to meet the information needs of a wide range of users, general purpose. And we have a special purpose framework, which is also designed to meet the specific needs of what? A specific user or group of users. Then we have a special purpose framework relevant to the public sector may include what? The following. 1, the cash receipts and payment basis of accounting for cash. And then the financial reporting provisions established by international funding what? Organization. Then the financial reporting provisions established by a governing body or the legislature, or the financial reporting provisions of a contract, such as project grants, etc., etc. Now, how do you plan the audit? Audit planning for financial audits. The first thing you have to note is that the audit risk. There is always a risk. The approach to dealing with audit risk is in public sector audit is similar to external audit in the private sector. They are all the same. The auditor should reduce audit risk to an acceptably low level so as to obtain reasonable assurance as the basis for a positive audit opinion. Audit risk has 3 components, as we all know. Now, the question is, how do you reduce audit risk? If you want to reduce audit risk, you have to expand the scope of your work so that the risk will be very, very minimal. But if the audit risk will be very high, if you do a little job, that means audit risk is very high. Now, let's see the 3 components of what? The audit risk, which is on the diagram. The audit risk comprises of what? Risk of material misstatements. That is number 1. Risk of what? Material misstatements. Then within the material misstatement, we have inherent risk and control risk. And you know what is inherent risk already? And then we have a detection risk. The detection risk, the risk that the auditor will not detect a material misstatement. That occurs. Professional skepticism, what does it mean? As usual, the auditor should plan and perform an audit or assurance engagement with an attitude of what? Professional skepticism, recognizing that the subject matter information may be materially misstated. An attitude of professional skepticism means that the auditor makes a critical assessment of the validity of the evidence obtained and is alert to evidence that contradicts or calls into what? Question the reliability of what? Documents or representations by the responsible party. Audit plan. Now let's go to the plan itself. The auditor should develop an overall audit strategy that includes the scope, timing, and direction of what? The audit, as well as an audit plan. So the audit strategy is the overall strategy you have to adopt. In auditing, we have so many ways of. We have system-based risk audit, risk-based auditing, and so forth and so forth. So let's see. You must first define the reporting objectives of the engagement, so as to plan the audit of the timing of the audit. So define the reporting objectives of the engagement, so as to plan the timing of the audit. 2, you must also consider the factors that are likely to be significant in directing the audit team's efforts. Significant areas. Then you must consider whether knowledge gained in other audits might be of what? Relevance. You might have got evidence from knowledge from auditing other institutions. Check and see if they are relevant in this instance. Decide the nature, timing, and extent of what? Resources necessary to carry out the audit. You must also consider the expectations of the legislature and other relevant users of the audit reports. Now, the auditor should plan the audit so that it is what? Conducted in an effective and efficient manner. The audit plan should include a description of what? The nature, timing, and extent of what? Planned risk assessment procedures. 2. The nature, timing, and extent of planned further audit procedures at the accession level to audit the reliability of what? Assertions in the audited material. That's the explanation given there. Understanding the audited entity, its control environments. You must understand the audited entity and its control environments. As part of the process of getting to understand the audited entity, as part of the audit planning process, is obtaining an understanding of its internal controls. That is the most important. To obtain an understanding of the control environment, it may be relevant to consider what? The audited entity's communication and enforcement of integrity and ethical values, its commitment to competence, the management philosophy and operating style, the existence and level of what? Internal audit activity, the assignment of authority and responsibility, and human resource policies. So the environment, that is what it entails. And then the auditor's understanding of internal control relevant to financial reporting may include the following: the classes of transactions in the audited entities' what? Operations, the accounting records and supporting information that are used to record, process, and then report transactions, how the information system captures events and conditions other than what? Transactions that are significant to the financial statements, the financial reporting process used to prepare the audited entities' what? Financial statements, including what? Significant accounting entities, controls surrounding journal entries, including non-standard journal entries, the relevant controls that relate to what? Compliance with authority, control related to monitoring performance against the budgets. Now, how do you conducting the audits? First, we say risk assessment. Is that also? During the audit, the auditor should assess the risk of material misstatement at the financial statement level and the accession level for classes of transactions, account balances, and disclosures assessment procedures. May include what? 1. Questioning management and staff within the audited entity, who in the auditor's judgment may have information that could assist in what? Identify risk of material misstatement due to fraud or error. Then you must also do analytical procedures. You must do observation and inspection as well. When judging which risks are significant, the auditor should consider. So if you are judging which of the risks are what significant, you must find out whether the risk is a risk of fraud, and then the complexity of transactions. You must also consider whether the risk involves significant transactions with related parties. These are the areas which are having significant risks. Then you must also look at the degree of subjectivity in the measurement of financial information related to what? The risk. These are all significant risks. Then whether the risk involves significant transactions that are outside the audited entity's normal course of business or that seemed unusual. The next one is whether the risks affect comply with laws and regulations. So these are significant risk areas. Now, what do you mean by response to assess risks? Once you have assessed risk, and most of the time, the question is they'll give you scenario questions and then they'll ask you to identify the risks in the scenario. Then the next one is what is your response to those risks you have assessed? So in a scenario question, they'll give you the first one will be find out the risks. After identify the risks, the B may be probably what is your response to the risks. So let's understand this very well. In response to asset risks, the auditor should design audit procedures. So response to your asset risk is to what? Designed audit procedures, such as syntactic procedures and test of controls. That's one. Examination of the control risk requires the auditor to obtain evidence that the controls are operating effectively via what? Test of control. So you must test the control to see whether those controls that you put in place are actually working. You must also do syntactic procedures which include both tests of details and analysis of classes of our transactions, account balances and disclosures. That's syntactic procedures, detailed testing. Then there should always be some syntactic testing, irrespective of whether controls have been tested or not. If you test the control and it's working, still you must do what we call syntactic testing. Then consideration relating to fraud. Assuming you are auditing and then you identify a fraud or there's a sign of being what. So the auditor is responsible for obtaining reasonable assurance that the financial statement taken as a whole are free from material misstatements, whether caused by fraud, that is intentional, or error, unintentional. So two types of fraud are relevant to the auditor. One, misstatement resulting from fraudulent financial reporting. Fraudulent financial reporting, where the financial statement will be skewed. Then the second one is misstatement resulting from the inappropriation of what? Assets. Appropriation of what? Misappropriation of what? Assets. So these are the two types of fraud. Misstatement resulting from what? Fraudulent financial reporting, and those of what? Misappropriation of what? Assets. These are the two types of fraud. And let me go on here and say that who can commit misappropriation of assets is the staff, the general staff. Any of them can commit it. But when it comes to fraudulent financial reporting, most of the time it's the management. They are responsible for preparing the financial statement. So they will skew the financial scheme in such a way that it will benefit them. Now let's go look at all the evidence that you'll be obtaining. The quantity of evidence required depends on what? The risk of material misstatement of the subject matter information. More audit evidence is likely to be needed when the risk is higher. So once you identify the risk and the risk in that area is higher, you need more evidence. Then the quality of the evidence, yes, is also important. The higher the quality, the less that may be required. Some evidence can be one or two, yet it will be very, very what? Qualitative. Then the third one is evidence provided by original document is more reliable than evidence provided by what? Photocopies or scanned images. You all know that's true. Evaluating misstatements. Now that you have know your misstatement, you need to evaluate them. The auditor should keep a record of what? Misstatements identified during the audit. Yes. And communicate these to what? Management. And those charged with what? Governance. The auditor should invite management to correct misstatements. And if they refuse to do so, the auditor should find out why. So it is your responsibility to ask them to correct the misstatement. And if they say no, you ask them why. Those charged with governance should be notified of what? Uncorrected misstatements and the effects that they may have on the opinion in the auditor's reports. Now let's look at audit reports. Forming an opinion. The auditor should form an opinion based on an evaluation of the conclusion drawn from the audit evidence obtained. So as to whether the financial statements as a whole are prepared in accordance with the applicable financial reporting framework. And this opinion should be expressed clearly in a written audit report. Yes, it's true. You need to report on it. And in order to form an opinion, the auditor must first conclude whether reasonable assurance has been obtained as to whether the financial statement as a whole are free from what? Material misstatements, whether due to fraud or error. Now let's look at elements in the auditor's report. As we usual, auditor's report should capture some elements. So the auditor's report should what? Be in written form and contain the following elements. One, the title, indicating clearly that this is the report of an independent auditor. Yes, as usual, as I discussed with you previously. Then the second one is addressee. Then the third is an introductory paragraph indicating which financial statement have been what? Audited and the period that these cover. Then a section of what? Management responsibility for the financial statement is also should be there. Then a section on the auditor's responsibility as usual. Audit report is audit report, whether in a public sector or in a private sector, the same. Then a section on opinion, your opinion. Then the auditor's signature, etc., etc. Now, we have a modification to the auditor's opinion. We have two types of reports. We have unmodified reports and a modified reports. Now, let's look at a modification. The auditor may express a modified opinion. This may be any of the following. So, if you are modifying an auditor report, a qualified opinion, adverse opinion, or a disclaimer. You can qualify the opinion and then you can also write adverse opinion or what? A disclaimer of opinion. Let's look at the qualified opinion. When the auditor concludes that misstatements are material but not pervasive. They are material but not what? Pervasive. Or the auditor was unable to obtain sufficient appropriate audit evidence of which to have an opinion, but concludes that the effect on the financial statement of any undetected misstatements could be what? Material, but not what? Pervasive. So that is where we what? Qualify the opinion. The adverse opinion can also be written by having obtained sufficient appropriate audit evidence. And the auditor concludes that misstatements are both material and pervasive. The disclaimer of opinion is when the auditor has been unable to obtain sufficient and appropriate audit evidence on which to base the opinion, and the auditor concludes that the effect on the financial statement of any undetected misstatement could be what? Both material and pervasive. So the three ways of what? Modifications are still here. How the one we discussed in the previous report writing. It's the same thing. Audit report is audit report. Whether in the private sector or the public sector, they are all the same. ESIS on financial audit in the public sector. I told you the meaning of ESIS. So the ESIS, the full meaning of ESIS is that International Standard on Supreme Auditing Institutions. That is a standard that we use in the public sector, in auditing public sector. To give you an idea of the scope of more detailed ESIS, here is a list of most of the ESIS currently in use. So in Ghana, we have under the soon to be replaced by INTOSAIA structure. When they say INTOSAIA, it means that International Organization of Supreme Auditing Institutions. That is all the auditing institutions in the public sectors in what? All the countries. In Ghana, Ghana is the audit service is a member of INTOSAIA. So ISAIA 1200 overall objectives of the independent auditor and the conduct of an audit in accordance with what? International standard. There, if you go there, they'll tell you the overall objectives of the auditor in the public sector. Okay? Then you go to what? ISAIA 1210. Agreeing the terms of audit engagements. Agreeing the terms of the audit engagement. How to agree in terms of what? Audit engagements. Then ISAIA 1220. Quality control for audit of financial statements. It's also there. Then 1230. Audit documentation. You need to. Then ISAIA 1240. The auditor's responsibility relating to fraud in an audit of what? Financial statements. Then ISAIA 1250. One thing you must know about this ISAIA is that they jump 10, 10, 10, 10 intervals. Look at it. 12, 10, then you go to 12, 20, then you go to 12, 30, you go to 12, what? 40. Then the next one is what? 12, 50. Have you seen it now? Consideration of laws and regulations in the audit of financial statements. Then 1260, communication with those charged with governance. All this besides, then it continues. Now Isaiah 1265, communicating deficiencies in internal controls to who? Those charged with governance and management. Then Isaiah 1300, planning and auditing of. So these are the laws, the standard we use. All right. Then we have to come to just this one. We say what? Audit evidence. 500. 1505. External confirmations. And then analytical procedures. These are all, but you're not supposed to choose these ones. But know what pertain there. That's all. Those are the most important ones. It continues audit sampling, which is 1530 up to the confirmation, external confirmation, analytical procedures, audit sampling. It goes on, goes on, goes on. Performance auditing in the public sector. How is the performance audit? From the beginning of this class, we learned that public sector auditors can do what we call financial statement audit. We also do performance audit, compliance audit, and the rest. See now? So this is performance auditing in the public sector. So we are now on the performance audit. We just did the financial one, we have the performance audit. Now the nature of performance audits in the public sector. Special features of performance audit are as follows. Performance auditors or audit have special features. One of them is, whereas financial auditing tends to apply relatively fixed standards, performance auditing is more flexible in its choice of subjects, audit objects, methods, and what? Opinions. Whilst a financial auditing, we use what? A standard, fixed standards, and the performance auditing is a more flexible. Performance auditing is not a regular audit with formalized audit opinions. It is an independent examination made on non-recurring basis. And then it is by nature wide-ranging and open to judgments and interpretation. It must have at its disposal a wide selection of investigative and evaluative methods and operate from a quite different knowledge base to traditional auditing. It is not a checklist-based form of auditing. The special nature of performance auditing is due to the variety and complexity of questions related to its work. Within its legal mandate, performance auditing must be free from what? Free to examine all government activities and to do so from different perspectives. So they do the 3 E's: the economy, efficiency, and effectiveness. Value for money audits. So that's the performance auditors. That's what they do. Audit of economy may provide answers to questions such as what? Do the means chosen or the equipment obtained, the inputs represent the most economical use of public funds? Or have the human, financial, or material resources been used economically? Or are the management activities performed in accordance with what? Sound administrative principles and good management policies? So when you talk about the definitions, what do you mean economy? Already we learned this thing when we were doing the report writing on the internal audits. The principles of economy means minimizing the cost of what? Resources. That one can be got from what? Isaiah 300. And then efficiency, also the principle of efficiency also means getting the most from the what? Available resources. It is concerned with the what? The relationship between resources employed and output delivered in terms of quantity quality, and timing. When you say effectiveness, what does it mean? It means the principle of effectiveness is concerned with what? Meeting the objectives set and achieving the intended use or results. Effectiveness is essentially a global attainment concept. They are the stipulated aims of the program or activity being what? Met by the means employed. Then are the impacts observed really the results of the policy rather than what? Other circumstances. The desired goals of a program might be achieved, but the reasons for success in reaching these goals might not be the result of the program. Cost effectiveness is different from effectiveness, but may be the focus of a performance audit. Cost effectiveness is concerned with the ability to achieve the intended outcome of the activity or program at a reasonable cost. Whereas efficiency relates inputs to what? Outputs. Cost effectiveness relates input to what? Outputs. There's a diagram here. Cost effectiveness. And you could see everything. Efficiency is there. The efficiency inputs, then processes to what? Outputs. Then the outcome. The objective should also be analyzed. Central concept in performance auditing. Three parties to a performance audit. The three parties to the performance audit are the auditor, the intended user, and who? The responsible party or parties. That is the three-party relationship. Audit objectives. What are the audit objectives in performance auditing? The objectives of the audit should relate to the what? Principles of the three E's. That is the economy, efficiency, and effectiveness. The objective or objectives can be set out as a question or a number of questions. And the aim of the audit is to what? Establish what? Answers to the question or questions. An audit objective might be framed as an overall audit question, which can be broken down into more precise related and complementary sub-questions. What is assurance? All audit work is a type of assurance service. Yes, it's true. So performance audit is what? An assurance. This means that the auditor provides reliable and valid information to an intended user, typically the legislature in the case of what? Public sector auditing, or the executive, about the activities of the responsible party. Okay? What is the audit approach? So in performance auditing generally follows one of the three approaches. There are three approaches. One of them is what? A result-oriented approach. Result-oriented approach. This assesses whether the outcome or whether the outcome or output objectives have been achieved as intended, or whether programs and services are operating as intended. That's intention. That's result-oriented approach. Then the second approach is a problem-oriented approach. This examines and analyzes the causes of particular problems or deviation from the audit criteria of what? The trees. Then the third one is a system-oriented approach. This examines the proper functioning of what? A management system, such as a financial management system or a control system, and consider whether the system is functioning effectively, that's efficiently, and effectively, or whether improvements can be made. So there are three methods or three approaches: a result-oriented, problem-oriented, and what? System-oriented. Okay. Audit criteria used. Audit criteria used. The criteria can be qualitative or what? Quantitative, but should define what the audited entity will be assessed against. So in this case, the assessment of what the results should be stated. The criteria, the audit criteria are: one, may represent best or good practice. Either best or good practice. An expectation of what? What should be according to laws, regulations, or objectives. Another one is may be what is expected. Then the last one is maybe what could be, what could. So in a very nice way, learn it like this. The first one is what should be. The second one is what is expected. Then the third one is what could be. The nature of the audit and the audit questions determine which criteria are the most suitable. If you go to Isaiah 3200. There too, there is audit risk. Is that also? The risks that an audit will fail to add value ranges from what? The likelihood of what? Not being able to provide new information. Then the second one, the risk of neglecting important factors, and as a consequence, not being able to provide recommendations that will make a contribution to better performance. Important aspects of risk may include what? The audit team not possessing the experience to what? Conduct sufficiently broad or deep analysis. Two, lacking access to quality information. Three, obtaining inaccurate information. And then four, being unable to put all findings in perspective. Look to materiality as far as performance auditing is concerned. The auditor must consider materiality throughout the audit process. The materiality should be understood as the relative what importance of a matter within the what context in which it is being conducted or considered. An issue should be considered material where the topic is what considered to be of particular importance and where improvement will have a significant impact. Communication. Good communication between the auditor and the responsible party is essential. From the audit planning stage onwards, auditors should notify audited entities of the key aspects of the audit, including the audit objective, audit questions, and subject matter. Notification will usually take the form of what? A written engagement letter. So in every audit there should be engagement letter and regular communication during the audits. Professional skepticism is also in the performance audits. The following examples include how professional skepticism can be particularly important in a performance audit. 1. Considering the integrity of management. 2. Questioning the accuracy of responses to inquiries and what? Other information obtained from management and those charged with governance. 3. Revising risk assessments as a result of identifying material or significantly inconsistent information. 4. Be alert to audit evidence that contradicts other audit evidence obtained. So professional skepticism is needed when assessing the risk of fraud, because management and employees who are engaged in fraud will take steps to conceal the fraud from the auditor, because it's intentional. Okay, the auditor shall assess the risk of fraud when planning the audit and be alert to the possibility of fraud throughout the audit process. Unlike error, fraud is intentional and usually involves deliberate concealment of the facts. If you go to Isaiah 3000, you get it there. Now, the performance auditing process, designing the audit. So to ensure that a performance audit is properly planned, the auditor needs to acquire sufficient knowledge of the subject matter in a pre-study. The planning phase should also involve research work aimed at building knowledge, testing various audit designs, and checking whether the necessary data are available. Then, This makes it easier to choose the most appropriate audit method. Isaiah 300. Now, link between types of audit evidence and different methods. So if you are doing the audit evidence you want, and then the methods of data collection. If you are doing what testimonial evidence, then you need interviews, surveys, questionnaires, focus groups, or reference groups. But if you are doing documentary evidence, then file reviews using existing statistics, using existing what databases. If you are using physical evidence, then you have to go and do observation of people, inspection of objects or processes, experiments, etc., etc. If you are doing analytical evidence, then quantitative data collection methods such as what? Regression analysis, computations, comparisons, etc. Sufficiency and appropriateness of audit evidence. As with other types of audit, the auditor in a performance audit should obtain sufficient and appropriate audit evidence in order to establish audit findings, reach conclusions in response to the audit objective, and audit questions and issue recommendations when relevant. Now let's go to what is sufficiency of audit evidence. What do you mean by that? That sufficiency is a measure of the quantity of evidence used to address the audit objectives and support the audit findings and conclusions. When we say appropriateness of audit evidence, what do you mean by that? Appropriateness is a measure of the quality of the what? Evidence. Its relevance, validity, and what? Reliability for what? Addressing the audit objective. So let's take sufficient. When they say sufficient, that is the quantity. When it comes to appropriateness, the quality. That's all. Now, findings and conclusions. So that's reaching findings and conclusions in a performance audit is a 5-stage process. 1, the audit criteria. What should be done? 2, audit evidence you have obtained. What is it? 3, audit findings. What is compared with what? What should be? That's comparison. Then 4, determine the causes and effects of audit findings. Then 5, develop audit conclusions. According to what? The audit objective and questions. So recommendations. Where relevant, the auditor should present recommendations based on the conclusions. Questions to consider when making recommendations are: what needs to be done and why? Where does it need to be done? Who is responsible for doing it? And then the 4th one, will the proposed actions remedy the observed defects? And then the last one, could the proposed actions have any negative effects? Different methods may be used to follow up on the audit findings and recommendations. 1, a meeting may be held with the responsible parties after a certain time has what? Elapsed to find out what actions have been taken. 2, the responsible party may be asked to inform the SAI in writing about the actions they have taken. 3, follow-up may take the form of phone calls or limited field visits to collect information on the actions taken by the audited entity. 4, there may be what? A follow-up audit resulting in a new performance audit report. Now let's go to the compliance auditing. We have done financial auditing. We have done compliance audit. Performance audit. We are now going to what? Compliance auditing in the public sector. Now, framework for compliance auditing. Framework. Every auditing activity has some element of framework. So, the objectives of compliance auditing. A compliance audit is an independent assessment of whether a given objective or subject matter is in compliance with what applicable authorities identify as criteria. So in this case, we are trying to measure a particular activity against either a law or authority. Compliance auditing is concerned with regularity or propriety. What is regularity? Regularity means compliance with what? Formal criteria such as what? Relevant laws and regulations. And then propriety means observance of the general principles governing sound financial management and conduct by public officials. The three types parties to a compliance audit are the same. The responsible party. This is the executive branch of the central or local government, or its hierarchy of public officials responsible for the management of public funds or the exercise of authority. Then the auditor, who is the professional. In compliance auditing, the responsibility of the auditor is to identify the elements of the audit, assess whether a particular subject matter is compliant with the established criteria, and issue a compliance audit report. Then the third one is the internet user. These are the persons for whom the auditor prepares the compliance audit report, usually a legislative or oversight body. Now, characteristics of compliance auditing. What are the characteristics? Now, every compliance audit is an assurance engagement. Compliance auditing may cover a wide range of subject matter and can be what? Performed to provide either reasonable or limited assurance. Compliance audit may be attestation or direct reporting engagements. Attestation, as we all know already, in attestation engagement, the responsible party measures the subject matter against the criteria and presents the subject matter information. Then direct reporting engagement, as for that one, in a direct reporting engagement, the auditor is responsible for producing the subject matter information. So, subject matter of a compliance audit. The subject matter of a compliance audit is defined in the scope of the audit. It may take the form of what? Activities, financial transactions, or information. For attestation engagement on compliance, it is more relevant to identify the subject matter information, which may be a subject of compliance prepared in accordance with an established or standardized reporting framework. Now, planning and conducting a compliance audit. The first thing is audit risk. You have to consider audit risk, as we all know. The audit risk in a compliance auditing has the same three components as in the financial audits: inherent risk, control risk, and detection risk. So that is also the factors affecting the coverage of a compliance audit may be public or legislative interest or expectation. That is one. Impact on citizens. Then projects with significant public funding. Then beneficiaries of public funds. Potential breaches of what? Applicable laws and other regulations. Non-compliance with internal controls, or the absence of what? An adequate internal control system. Findings identified in the previous audit. The audit team skills. The audit team should have the necessary skills to carry out the audit. Difficult issues may require competent and experience not covered by the audit team. If expertise in a difficult or contentious issue is not available in the audit team, professional advice should be sought. Understanding the audit subject matter. The auditors should familiarize themselves with the audit subject. This may require studying relevant laws or regulations. It is also important to understand the control environment and internal controls that operate within the operations of the audited entity. So, compliance audit methods are here. You do observation. You also do inspection, inquiry, external confirmation, and you have what? re-performance, or recalculation. We also do symptomatic testing, tests of key controls, analytical procedures. Now, reporting and follow-up, evaluating audit evidence and forming conclusions. After completing the audit, the auditor reviews the audit evidence in order to reach a conclusion or issue an opinion. The evaluation process entails considering the evidence itself, both evidence supporting and evidence seeming to contradict the audit conclusion or opinion on compliance or non-compliance. Then we also consider materiality as well. The compliance auditor's report. Now, the auditor should prepare a report based on four principles, compliance. On four what? Principles. One, completeness. Under completeness, the auditor should consider all relevant audit evidence before issuing a report. The second one is objectivity. The auditor should apply professional judgment and expertise in order to ensure that all reports are factually correct and that findings or conclusions are presented in relevant and balanced manner. Three, timeliness. The report should be prepared in due time and should not be delayed. Then, four, a contradictory process. The principle of contradictory process implies checking the accuracy of facts with the audited entity and incorporating responses from responsible officials as appropriate. So, concerning attestation engagements, the format is here. Title, the reform of it means the title, the process, decision of the subject matter, information, extent and limits of the audit, including the what? The time period covered, responsibility of the responsible party and the auditor. Then audit criteria used, identification of the auditing standards and level of assurance, and then summary of work performed and methods used. Opinion, conclusion drawn. Then replies from the audited entity, if appropriate, as appropriate. Then signature and date. Then if you go to direct reporting engagement, the report is titled Identification of the Auditing Standards, Executive Summary as appropriate, Description of the subject matter, etc., etc. Now we have unmodified and modified opinions. An opinion is normally used in an attestation engagement. Yes, opinion. Where no material instances of what? Non-compliance have been identified, the opinion is unmodified. An example of the form for an unmodified opinion for a reasonable assurance engagement may be as follows. In our opinion, that's it. The so and so is in compliance with all material subjects with so and so that they use the criteria. They comply. We are doing compliance. So, in our opinion, so and so subject. That means the financial statement is in compliance in all material aspects with the what? So and so, the measurement you are using. Then follow up. Auditors should follow up instances of non-compliance when appropriate. A follow-up process facilitates the evidence of the effective implementation of corrective action. The need to follow up previously reported instances of non-compliance will vary with the nature of the subject matter, the non-compliance identified, and the particular instances of what? Circumstances of the audit. In audits carried out on a regular basis, the follow-up procedure may form part of the subsequent year's risk assessments. Thank you very much. May God bless you.